Ladies and gentlemen, dear guests, my name is Edina Mushmula and I'm happy to welcome you for the third day of FinConf online conference and digital transformation panel. Also, I'm pleased to introduce our moderator, Flavin Smojver, Director of Information System Supervision Department at Croatian National Bank. I will keep this very short. I will kindly invite Flavin to introduce his speakers and guests and open digital transformation panel. Thank you all, and I hope you will enjoy this conference today.
Thank you, Edina. First of all, just a very quick thank you to Edina and Zlatan for organizing this conference. Of course, thank you to for all the panelists for finding time in their busy schedules to take part in this panel. I think we'll have a great panel. We have 12 prominent experts to talk about digital transformation. We have in alphabetical order, we have Naida Justovic, attorney at law. We have Namik Hrle, IBM fellow, CTO of Data and AI Group. We have Robert Iljaš, CEO and founder of Identium in Croatia. Emre Karpuz, Deputy Executive Director of Payment and Financial Technologies Department at the Central Bank of the Republic of Turkey. We have Jesenko Majušević, Head of IT Department, Bankart from Bosnia and Herzegovina. We have Amir Oručević, Business Development and Digital Transformation Manager in MIBO Komunikacija, also from Bosnia. We have Görkan Özdemir, who is a Group Leader in Ziraat Technology from Turkey. We have Sanin Saracevic, who is Founder and CEO at Maestral Solutions, also from Bosnia. We have Filip Šaravanja, who is a Senior Analyst and FinTech Coordinator from the Croatian Financial Services Supervisory Agency. We have Violeta. I'm sorry, I cannot pronounce the surname. I apologize.
Santuli. It's so easy.
Thank you. Santuli, Group Marketing Manager at Printech Group from Greece. Alexander Yalbuninski, Vice President, Visa Solutions, and Bojan Ždrnja, who is CTO at Infigo from Croatia. So going over this very, very brief introduction, and I know that you're all eagerly waiting to start. So we're going to talk about financial services, digital transformation, and we're going to particularly touch upon the influence of COVID-19 pandemics. Just a bit of housekeeping info. If you have questions for our panelists, you can submit them via the conferencing system. Depending on how the discussion will progress, I'll try to select a few of the questions and discuss them with our panelists in the second part of the panel. We planned on having a break, but based on last 2 days' experiences, it seems it's better to just go ahead. So we'll try to go straight away, no breaks. The discussion was so interesting on Tuesday that the panelists went on for 7 straight hours. I'm sure we won't go for 7 straight hours, but it just talks a lot. It says a lot about the quality and the interest of the panelists and the audience in this subject. So you can read our esteemed panelists' CVs on the FinConf's website, so I'm not going to go into details. We have a lot to cover, so let's dive straight in. We have all witnessed the profound changes that the emergency measures related to the COVID-19 have brought, and many of those changes further push digital transformation. Now, Namik, I believe that in your role at IBM, you have a certain global perspective. How do you see the effects, both positive and negative, of COVID-19 on business, and which changes will revert back to normal and which will become the new normal?
Oh, thank you very much. First of all, thank you for inviting me. Hello to the audience. I hope everybody is well and safe. There is really no way around the tragic toll caused by the COVID-19 pandemic. All around the globe, lives and jobs have been taken away. Industries, enterprises have been damaged. Just a couple of days ago, what caught my attention was that one of the largest and oldest rental car companies that I've been basically using for decades, Hertz, declared bankruptcy. So this is just to name one of such traumatic cases, and that it won't be, unfortunately, the only one. Return to normal, whenever it comes, will be a different normal. That different normal will include new habits from organizational, social, cultural aspects. And what we do right now will define the future. And yet, making decisions and acting with assurance has never been more challenging. However, history is telling us that whenever there's a challenge, it is accompanied by an opportunity to innovate. And if there's anything positive about this situation, that's exactly that. In this particular case, the pandemic will accelerate, as you said, digital transformation that many companies have been already planning or already embarking on, some of them even mastering. Earlier arguments and alibis that prevented successful and speedy digital transformation can no longer be tolerated. Becoming an agile digital enterprise is essential, and needs to happen now. Up to through 2019, the standard operating model for many businesses was still location-based. People would go to work rather than work coming to them. Customers, clients would physically transport themselves to a specific site to get something done. For example, visit doctor, buy groceries, attend events. Also in the financial industry, a physical visit to a bank or insurance company branch was not an exception. But with COVID-19, that really changed. Work has to come to us and wherever we happen to be. And we engage with employees, customers, suppliers virtually. So the digital transformation is almost forced upon us. There is no time for procrastinating. To answer concretely your question about effects on business, I would like to use a framework that we in IBM follow internally, and I believe it will be useful for any organization. And that framework is organized around 7 key imperatives, which are empowering remote workforce, engaging customers virtually, provide remote access to everything, accelerate agility and efficiency in how we work, protect against new cybersecurity risks, reduce operational costs and enhance supply chain continuity, and finally, support health providers and government services, which are really kind of pressed right now. And just let me finish with, I would really need lots of time to go into details on all these. So I'll just give one example what kind of changes we can expect going forward. And that particular example comes from the need to engage customers virtually, and I believe it is very relevant also for the topic of this conference. The service centers, government call-in lines, healthcare providers have been swamped with massive call volumes. An exponential demand can be met only by exponential power of digital tools. So conversational artificial intelligence needs to become pervasive. Demand can be met only by that. So whether this is chatbots, virtual agents, other automated processes, which have been gradually making their way into business in recent years anyway, but the resource efficiency and effectiveness of these tools and procedures is great. Also, they can be embedded very fast. I know examples of virtual assistants that will stood up in a matter of hours. And all that will make these practices likely to become core business tools in the post-crisis era. Thank you.
Okay, thank you. That was so the technology itself is going to help us with technology. It's definitely there is going to be hopefully this virtuous circle. Now, to move a bit further and more towards the topic of this panel, how we buy and how we pay has changed greatly during the last decade. And now the COVID is pushing those changes even further. So, Alexander, how do you at Visa see the effects of COVID on provision of financial services?
Good morning, colleagues. And first of all, I would like to thank you for the opportunity to be here today with you because we are going through dramatic changes. And the whole world at this moment experiences all this impact from coronavirus. And this financial component is vital and essential for us. And even just starting personally, probably it's my first experience to take part in the fully online conference with a great audience around the region. And it's also a personal challenge for each of us just how to deal with it. Even within our organization, we're a global organization, and we're working around the globe. Almost all our branches are closed. But We just recently conducted some review, internal research, and people confirm that they may work efficiently in this environment. It means this brings some completely new dimension how we work too. And definitely with some kind of side effect regarding workload, regarding this lot of new experiences in meeting people in online, and how to difficult balance between work and personal life. But coming back to your questions, what we as a payment industry leader see in the payment, it's obvious and challenging. First of all, we see a dramatic decline in face-to-face volumes. People traveling less, sometimes almost stopping, and it affects the business. But as my colleague already said, it's like COVID is like force multiplier. It's acceleration. And like a compensator, we see a very boosting effect from e-commerce growing business in almost all regions, especially if it comes to domestic business. People start to buy online grocery, pharmacy, order some services, very high demand in terms of entertainment, mobile content, education, remote medicine, and everything to some professional services related to work arrangement, remote work arrangement. It's and the second question, apart from e-commerce, everyone understands at this moment that cash is not safe. Cash is carrying germs and like a vehicle for germs. And there are a lot of solutions in contactless in physical environment also growing dramatically. And we will talk about later on about the solution, what we may introduce just to deal with it and how we may boost all these trends. But it's also quite obvious. The third one, it's about SME segment, because it's one of the heavily affected segments, small business, medium enterprises by COVID-19. And we also have together just to think what to propose and what to suggest to enable this segment. What kind of tool should be incorporated, and because this segment realized that they also have to migrate to digital and migrate quite quick. It's also a question about the education and financial literacy, because people changing their daily routine. They don't buy their morning cup of tea or coffee. They don't buy the low ticket. They don't buy ticket for transit, and it's completely changing behavior payment pattern. We cannot learn something led by example when people look at different person who buying some stuff in the shop, and we have to educate ourselves, and it's also a challenge for the bank, for the infrastructure, how to teach people to make payment in, for instance, e-commerce industry in safe way, and not to be afraid. And we as a company, together with our partner, also from the very beginning of our crisis, where we looked at the most painful area, and immediately, like immediate response, we started to cooperate with the company who may help to solve concrete issues on the market which related to payment. For instance, the help to deliver healthcare employee to their work when public transport doesn't work in cooperation with the taxi company. In partnering with the banks and big merchants, how to deliver goods and grocery to elderly people who may not go out just to be safe. It means it both there is a lot of opportunity in business. There are a lot of solutions which we definitely may accelerate because the major of infrastructure is it's only a question how to scale it, and how to make, for instance, e-com payment as simple as we have face-to-face contactless payments in face-to-face environment, when we just may only click on the page or in mobile applications and finish and complete payment. It means a lot of opportunities, a lot of challenges, and acceleration of everything. Thank you.
Thank you, Alexander. Now, to move a bit further toward financial industry, Gökhan, you are leading digital transformation in the largest bank in Turkey. How do you, from your position, see the influence of COVID-19 on provision of financial services? And I'm particularly interested in how does this presumably stronger push towards digitalization interact with classical banking problems like dealing with legacy systems?
Thanks for the opportunity, Flana. Banks generally use legacy systems, mainframes mostly, with outdated technologies, but which remain critical to day-to-day operations. Many of us are like that. But legacy systems should not separate us from sharing and connecting at our highest potential to our customers. We must make ways to find those systems compatible to new digitalization efforts. They should not slow us down when product onboarding and etc. And at the end of the day, digital transformation is about culture, not just systems. So you must be willing to adapt to changing business environments if you are going to survive. And that means building a culture that embraces change. So you don't have to delete your entire legacy system and start over. Legacy systems, I believe, are not deal breakers for digital transformations. Indeed, new development methods, main principles can be used to work on any project or technology, and industries that still rely heavily on legacy applications and infrastructures like banks have already started to benefit from these methods. What are those methods the legacy systems can offer you? Like it's continuous integration, automated testing, DevOps, lean startup practices, focusing on the minimum viable product, focusing on the customer experience, user experience. With all of those methods, you can still use the legacy systems. And unlike traditional development methods, these methods ensure your ability to continue to deliver value while providing capability to safely deploy and the business demands. Legacy system owners, I think, should first of all identify the opportunities within their existing architecture, like the very high speed of mainframes. Also, they should pursue additional opportunities by decoupling their existing architecture, client side, the middle tier, and the data, so that in the client side they can affect the channels. In this COVID-19 pandemic environment, customers are using mobile channels more than ever. So this transformation is a must right now for everyone. We have to minimize the dependencies between the clients, services, and data. The more we couple the application architecture, the more opportunities there are to apply the modern approaches I stated earlier. Tightly coupled architectures combine the code, packaging, testing, and release of all components, so they are tied to the same release schedule and consequently dependent on each other. So you should review your applications by identifying your client-side and back-end services that you can change and release independent of each other. This will help you clarify the complexity of introducing major changes into your system. You should explore options to decompose existing monolithic systems into more loosely coupled client and server-side services, but you should avoid trying to split the applications all at once. It's generally made mistake. Instead, you should use a measured approach, only decoupling components as it becomes necessary, one step at a time, which is the primary principle of evolutionary architecture. As I said earlier, legacy systems are not deal breakers for digitalization. There are modern practices that can make legacy more effective. I said earlier, coupled architecture means applications, infrastructure, and data interact with one another through standard interfaces like APIs and microservices. So you can collaborate with fintechs with APIs also. Financial systems can also increase speed and efficiency by combining agile techniques like continuous delivery and continuous deployment. This reduces the manual tasks and the resources required. Another important area is the talent issue. The search for the talent continues in digital transformation, it's important to send a message to your current and prospective employees that digital transformation and the workplace it creates are the company's future. It's an important issue because legacy system owners have a hard time to keep the talent and keep their employees motivated. So focusing on digital transformation and new development methodologies will keep your employees more motivated and more happy.
Okay, thank you. You mentioned so many topics that we could go much deeper into. Every word, or almost every word that you said could just go on and on. But to get a bit narrower now, Violetta, your company, BigTech, has a big footprint in the southeastern Europe. This is the same question to you. How do you see the effects of COVID on provision of financial services? And I'm especially interested in your predictions on its influence on the retail, banking, and branches.
Sure. So good morning from me as well, and nice to be here again. Last year was face-to-face, now it's virtual, so it's interesting. Indeed, Slaven, we're in Central Eastern Europe in 16 countries, so we're kind of experienced this whole thing from many different angles. But there are some common areas, many common areas across our region. And I mean, everybody in banking or working with banking knows that this digital transformation or branch transformation have been very hot topics for many years now. But it really kind of happened overnight now with this COVID-19 issue, and we saw, all the different drivers of digital transformation that had been there all these years, like, the revenue or the cost discussion, the customer experience or their expectations or compliance issues, which were usually the drivers for any digital transformation discussion. Now they have all dramatically changed. So the business models are changing, what customers know and want and fear is changing, even compliance is changing. So we've seen this, having more speed and more momentum and what's happening. And it feels like we're getting in an era where, banks will be measured by the number of clicks to open a new account rather than the more traditional KPIs that you used to have in the past. So it's a new time, and retail banking especially, it's very, very interesting area. I mean, during COVID-19 crisis, we saw, most banks were pushing their digital channels a lot, or were creating new digital channels to accommodate for the loss of their branches operations. as they had limited hours or they were closing down in at least most of our countries. We saw large investments in marketing to communicate or differentiate on their digital offering, and a big effort to educate both employees but also customers. But the interesting part is that, you know, the customers got almost educated overnight, and because they had to. I mean, the ones that wanted to did it a few years ago, but now everybody had to learn new things in new ways. So today we see all the banks. I mean, if you go on the websites or, you know, listen to the radio spots or TV spots, the main message there is their digital offering. But what's happening now with the retail banking is that we're expecting to see major changes after this COVID crisis. And from our side, we see three different, say, transaction categories. So the one would be the ones that will grow through digital channels. I mean, once you have paid your electricity bill online, you will not easily go back, or at least most of the people, I don't think they will go back anyway. So the transactions that were possible before through digital channels will see a huge usage growth from now on. The second one would be the ones that will be shifted from face-to-face to video. So this is a new category, or, you know, it becomes very significant now. So, for example, to open a bank account, you usually would go to the branch or to apply for a credit card. But now we've seen that digital onboarding and e-signatures are picking up very fast because both sides, both the bank and the customer, they do want to take this digital and do it through video, and technology can allow it. So I think we will see a lot of video services offered through video from now on. And the last one, the last category we see is the ones that will remain in the branch. Because obviously you will need to have some things that cannot happen outside. And I think that these will consist partly from the previous category, so the people who would not do something through video, but they would still want to meet someone, sit down on a table and have a discussion, obviously with the proper distancing now. But also the transactions that require physical presence, or they don't make sense to be remote, like, say, for example, you want to get a prepaid card. You could do it digitally, like do the application and then the bank send it through, but the time required for the card to be printed and mailed to the customer may not make sense. So for these transactions, we see a major shift to self-service or assisted self-service channels. So from, you know, kiosks that would allow you to do many things without having a direct human interaction, or with employees with tablets that could connect to different systems and perform multiple transactions. We're seeing, you know, a move away from the teller and consultant zones that were kind of fixed to a more flexible and spacious branch and a true omni-channel approach. So actually, in terms of retail banking, I think we will see a significant shift in the channels and how they're being used. And we will see that branches will physically change to accommodate all the, you know, COVID-related concerns and even regulations, because now people will be very cautious for hygiene things and how much they approach people, how crowded the space is. So I think that banks will be changing quite a lot what their branches look like and what they're doing there. So I think overall banking will be changing. I mean, a lot of people already, there are surveys showing that a huge percentage of people would do banking differently from now on. You know, also the payments landscape is changing. So this has been covered quite extensively from Alexandra, so I don't want to repeat things. I just want to say that, you know, again, in our region, all of the countries recommended contactless payments, and many increased the limit of it to make it easier for people to do that. So again, you see consumers being educated overnight in the use of, you know, card payments, online shopping, all those things. So I think obviously the growth in the e-commerce industry is going to be big, and there will be a greater need for fraud protection since the speed at which this change is happening would create opportunities for criminal activity. So I think this is also an area that will see a huge growth. But again, I think retail banking will be the most interesting part of this whole discussion.
I love your answer. It covered so many things that I think are very important. Some of them are the risks of this, kind of shotgun digitalization that's happening, and it's shotgun for the banks and for some of their clients. As you well mentioned, some of them didn't want to get digitalized, but now they have to, and it's going in that direction. So it's very interesting. It's a very interesting topic that it's not panacea, that there are not only good and great things. And yes, that's an important thing. In my role as a regulator, I always look at risks, and I really do see many risks here. Now to move a bit on, there are many predictions on technological changes and developments that COVID will bring, and many of them are focused on further adoption of cloud computing and this collectively known technologies, collectively known as AI. So, Namik, you are the CTO in IBM's Data and AI group. So, IBM is a big player in private cloud arena. What is your opinion on further and faster adoption of cloud computing? And can machine learning help us in navigating this changed landscape? Are there any threats?
So, Slaven, your questions capture the two key drivers of the digital transformation, which we all agreed we need to get serious about, particularly in the light of COVID-19 consequences. And accelerated cloud adoption is expected to be one of the most likely consequences of the current situations. At the same time, I wouldn't like to ignore something that previously another meeting was talking about, which is also need for modernization of the legacy applications, and the mainframe that are still in the core of the most of the business critical, mission critical banking, for example, applications. However, secure cloud technology accelerates efficiency. It supports new work practices and serves as a driving force for transformation and modernization. And we can already see that organizations embracing public and hybrid cloud are already using this crisis as an opportunity to emerge stronger, better, and more resilient. Namely, we can see that even now in this crisis, dozens of business-oriented applications are now connecting homebound workers to collaborative tools that enable business continuity. So, cloud-based support for video conferencing, file sharing services, communication platforms, chatbots, hosts of data analytics, graphic design, accounting, HR, sales management. All these programs have really allowed remote employees to continue work, in some cases as they never left the company offices. And similarly, remote developers, software developers, continue writing code and building applications in cloud-supported containerized environments. At the same time, artificial intelligence-backed internal and customer-facing applications kind of keep humming along because they are really, again, built and managed in the cloud. So I would say that cloud is really the key to a successful physical to virtual transformation that I and my colleagues before mentioned. And this is really one of the most profound changes brought up by the changes in how we behave and work. And organizations will need to continue modernizing operations to realize the immense benefits of cloud-native capabilities, which we should really already be aware of. This is location independence, this is talent flexibility, this is scalability, this is resilience, interoperability. And you see, I'm mentioning all these things that were already associated with cloud, but all these attributes are so much relevant now, much more relevant in the COVID situation. So this is what we call cloudified delivery, right? And we expect that mission critical operations assets will move exclusively to the cloud, and to enhance this resiliency, but also to enable workload commoditization and optimization. So to conclude, where cloud was once a desired future end state, it is now indispensable its immediate environment. As far as machine learning or broader AI usage is concerned, our surveys found out that like 97% of executives today say their organization will deploy more AI tools in the next 2 years than they had prior to COVID-19. And as you know, artificial intelligence is in the foundations of the smarter workforce planning. It enabled agile workforce, it's cognitive, virtual workflow, talent ecosystem. And some organizations have turned to virtual assistants, as we mentioned earlier, and then chatbots to promote frequent and consistent messages. Another area of broad AI usage is handling supply chain interruptions. And we have seen that can occur frequently in situations like COVID-19, right? And the ability to generate granular real-time data about supply chains has gone from, nice to have to actually necessity. And that's exactly where technologies such as AI, backed also by automation, blockchain, Internet of Things, 5G, edge computing, these are really the key technologies that we will actually see to help overcome the thing. And finally, AI is finding major usage in addressing cybersecurity risks. I know that we will talk about it more by other panelists, but I can't not to mention that because AI is the driving technology that will help there. As the world struggles with the impacts of COVID-19, cyber criminals have unfortunately mobilized. You can always say the creeps are mobilizing in these kind of situations. So capitalizing on the pandemic, they're launching the attacks, using tactics from phishing, campaigns, malicious domain, targeted malware, ransomware. So since February, I have some kind of really fascinating, for me at least, statistics that, our IBM X-Force, which is one of the most renowned commercial security research teams, observed 4,300% increase in coronavirus team span. And of course, organizations that were insufficiently prepared have been caught completely off the guard. Again, some numbers that I collected to prepare for this panel: 76% of organizations don't have an incident response plan. And strikingly, and almost unbelievably, 1 in 4 organizations don't have a plan at all. But even with these resilient operations are being stretched to their limit, pandemics is a really unprecedented scope. And then finally, this is why comprehensive implementation of cybersecurity measures backed by AI, done actually in the cloud, back to your question, will be crucial and will be believed its potential source, even then, of competitive advantage to end up on a positive note. Thank you, Slav.
Thank you, Namika. Again, you touched upon so many topics that I believe that after this conference, people will start Googling more and going into areas a bit deeper that are of interest to them. And as you mentioned, we are definitely going towards cloud more and more. Even the banks are going towards cloud, which is a great interlude to my next question to Gökhan. For the banks have in general been very wary of the cloud. How do you see the perspective of adoption of cloud computing in the financial sector and the related risks?
As my colleagues mentioned, people can't leave their houses and go to branches, so they use more and more mobile and digital channels. So there's a peak demand for the digital channels, and cloud computing is a model that is designed to satisfy this fluctuating demand. And if implemented correctly, cloud services will be well positioned to support these rising requests, rising transaction numbers, such as those exhibited during this coronavirus crisis. It has elasticity and hyperscale capabilities for as long as or as short as it is needed, assuming that the cloud providers have enough capacity to adjust for the increase. And cloud is the key enabler towards this digital transformation, because of this reason is enough, I guess. Coupled with the understanding that it is secure and the cloud providers have more spending power to maintain their cloud, we can see that the cloud is a clear requirement to leverage the digital technology required for the banks. As the mobile commerce has become more important in the past years, and this pandemic was a catalyst, customers increasingly expect a better and real-time customer experience. At the same time, fintechs, which are mostly on cloud right now, are on the scene right now, adding further pressure when it comes to delivering added value to customers. In this competitive environment, banks have to transform digitally to remain relevant. And cloud is the first step on this journey, I guess. It enables banks to focus time previously spent on running and maintaining costly IT infrastructures on activities of greater importance to their customers. And also, it allows them to partner with fintechs more easily. Also about the cost optimization, historically, many banks have their own data centers. As the cloud negates the need for the banks to buy data centers, it gives them the ability to expand into international markets much easier. If a bank wants to establish a presence on another country, bank may have to purchase additional data centers to ensure the resilience and meet the peak demand. However, this means that for most of the year, business is spending its millions of dollars or euros to maintain data centers only 10% cost most of the time. It's highly inefficient and cost intensive as your infrastructure needs to meet peak demand if your volumes are lower for the rest of the year. So adopting the cloud enables the banks to move to like an OpEx model that they can enjoy the elastic scalability and only pay for what they need. This gives them the agility to scale their data storage up and down depending on the needs of the business. But when we look at the risks of entering the cloud, one of the main reasons banks were initially hesitant to adopt the cloud is because they were afraid that moving their sensitive data off-premise and into the cloud would leave them vulnerable to security breaches, and that's a big risk for them. However, big cloud providers are spending more money on security than they ever than the banks. It can be said that cloud is more secure than on-premise facilities and will be more secure even in the future. Another risk is the government regulations that limit the use of cloud, but these limitations will eventually come to a point that banks will be able to use public cloud, I guess. So the cloud providers are working hard to comply with those regulations, and authorities are seeing the emerging use of the cloud. At this point, my opinion is if your country may not allow you to use the public cloud, but you should at least start transforming your systems to a cloud-ready architecture and create your own private cloud in your data centers so that you can benefit from most of the advantages of the cloud. And more importantly, when the regulations allow, you can migrate to public cloud much easier. So long story short, while there has been some debate about the role of regulatory attitudes, I believe it mainly comes down to the fact that banks now realize the cloud is a key enabler towards cloud and for the digital transformation of their businesses, which allows them to focus on activity which enhances the customer experience and competes with others. And cloud providers have more spending power to maintain their clouds, secure them. Cloud is a clear requirement to leverage the digital technology required for the bank's future success.
Thank you. You mentioned one thing that we hear a lot, and that's that banks, even if they're not using directly cloud, they're using, they're moving to this cloud-ready technologies. So they're using technologies with which they will be able one day, hopefully seamlessly, migrate into cloud and utilize the scale of the cloud and all its power when the regulation will allow them. So it's very interesting development. We see that a lot. Now, moving on, yes, Enko, you are the head of IT department in the only card processor in Bosnia, and card processing has high availability, confidentiality, and integrity requirements. What do you think is the influence of COVID on further and faster adoption of cloud computing? And again, opportunities, risks?
Hi, Slaven. Good question. We are actually seeing a huge shift in our transactions from the standard ATM cash withdrawals to e-commerce transactions, but still not enough to be compared to the companies, to the countries like Sweden or let's say China that have most of their business online. So we are slowly moving. Banks are slowly migrating to these new solutions. Banks that didn't want to do anything with e-commerce are now inquiring about e-commerce licenses, and they are trying to acquire new customers and clients as small stores or let's say groceries are now doing their business online. A lot of people during the COVID shifted their morning purchases like bread and milk and stuff like that to suppliers that handle their business online. So we are seeing a lot of questions from the banks how to shift their business towards this new environment that we are seeing us in. But the regulations and the banks and the financial picture is really much that's been holding us back, let's say, because shifting to cloud computing, cloud business and shifting to e-commerce business requires a lot of investments towards the banks, towards the processing centers, towards the merchants. We are mostly here in Balkans. We are mostly a cash-oriented society, and that's a big problem for us. A lot of the businesses are used to this way of handling their purchases. So now they are shifting their business towards e-stores that requires them to do a whole new way of thinking, whole new way of doing business. The other big question is that people are not really sure of risks in doing these online transactions. Banks also need to do more about doing awareness programs and educating their customers towards the risks. Phishing is a really big problem. Recently in Bosnia and Herzegovina, a lot of the campaigns for donations were done online, so people try to get credit card information from a lot of the customers by pretending that they are doing some kind of donation or online, let's say online bingo, online lottery and stuff like that. And we had a lot of inquiries from banks about protecting our customers in certain situations. But the main thing is that we are going to, as a society, we are going to need to adapt to this new way of thinking, online thinking, and we will have to be careful of how we handle our credit card information, our own information, because we are also seeing a lot of increase in fraud during this COVID. We used to have like maybe 1 or 2 fraud attacks on banks in a year, but now we are seeing 1 or 2 in a week. So a lot of informations are being held online with the new switch to online commerce, but a lot of the risk has been switched from this standard way of fraud, let's say stealing of cash from ATMs and stealing of cash from the people in a simple way of crime to this more sophisticated way of crime that's been done through the emails, phishing, through the calls to the customers, asking them to participate in certain online gaming or online lottery or whatever. But we as society will have to switch to a new way of thinking, a new way of doing business. Younger generations are really good at that. we can see that they are adapting this more quicker than the older generations. But we will have to all do this in a, let's say, step-by-step manner, not to be quick to switch all our business to online business before we do the fraud prevention, before we do education of our customers, how to handle their money online in a safe way. And that's what we are been doing lately. We are really much invested in creating new solutions for fraud detection and prevention, and also for creating new solutions that we will give to the banks that they can offer to their customers, so the customers can turn their cards on and off at any point of time and be sure that their money won't be stolen while they are away on vacation or while they are not online. You can actually turn off e-commerce when you don't want to use it, or limit your spendings on e-commerce, so you are sure no one is taking whole your salary while you are sleeping. So also you can turn off your cards while you are sleeping, so no one can access them. And also geotagging your cell phone and your card. So your purchases now, when you are purchased on the POS or when you are withdrawing money on ATM, the card transaction is matched by your mobile phone location. So you are sure that someone is not using it in a different, let's say, town, on a different location. So these are all the tools that customers will have to empower, so they can be sure about the spending. And while they are sure about spending money online, this increase in e-transactions will be very much growth and very much bigger than we thought.
Thank you, Yesenko. As business and working is moving online, so are the crooks. And we obviously see a great uptick in the phishing attacks and successful and unsuccessful hacking attacks. And both you and Gökhan gave a solid introduction to start talking about regulation. Now, financial services are a heavily regulated area, and the digital transformation brings many benefits, but there are also risks involved, as you covered very succinctly. And now, as Sanin mentioned earlier in pre-preparation to this talk, who controls the regulators? But regulators themselves are often facing conflicting requirements. Like on one hand, they have to stimulate innovation, and on the other hand, they have to regulate. So, Emre, you are the Deputy Executive Director of Payment and Financial Technologies at Department of the Central Bank of Turkey. From that position, what do you think? How can the regulator balance this need for innovation with risks that innovation brings?
Thank you, Slaven. As you told, it's generally the regulator's fault when a crisis comes and something is ruined, right? And this is what makes regulators' job really difficult. So, as you and other panels have already mentioned, we are really experiencing extraordinary days. And in fact, we don't exactly know how long it will continue and how exactly will the new normal look like. Of course, this situation increases the uncertainties, and uncertainties generally feed the risks. And when we speak about risks, regulation is one of the first points that come to mind for mitigating those risks. But when a new regulation is formed, the first reaction of unregulated parties or the parties that will be regulated for these new provisions is usually negative, because they become anxious. They feel anxious. And because new regulations mean new burdens and new expenses, we can understand this. But the fact is generally different. Research shows that effective and well-designed regulations generally result in increased investments, lower prices, better quality of services, and interestingly, more innovation. So the question is why? If we can find the answer to this question, why, then we can move really in an effective way while making our regulations. For sure, there are many specific points that we can raise against this question, but for me, the answer is simple and one word. It's confidence. With a well-designed regulatory environment, all actors in the sector will generally know what they will face during different circumstances in the sector. Let me open a parenthesis and tell that COVID-19 was not a circumstance that any of the regulators was waiting. To be honest, it's very extraordinary case. But when we come to our regulations, if I'm not mistaken, NAMIC have given some examples from some organizations which do not have any business continuity plans or any other this kind of emergency plans. But when you come to financial sector, since it is regulated, almost all of the institutions functioning in financial sector have their own business continuity plans. Yeah, we can discuss if they have functioned well or not, but they had it. And for example, in Turkey, all of the FMIs, all the financial market infrastructures, passed this process very successfully because they had their business plans in the past. And it was because of the regulations. So I am telling this from the payments perspective, of course, but I don't think that the situation is different for other kind of financial services or other kind of sectors. So especially during those days, in other words, during the periods when uncertainties are increased, regulation become more and more important. As we all know, the key rules of game is changing, not only for financial sector, but all sectors, for all sectors. And unfortunately, we are not sure if this change will last forever or they will be temporary. But even many of the changes might be temporary ones, I'm pretty sure that nothing will be the same compared to pre-pandemic period. And because after the society faced with COVID-19, importance of digitalization and remote transactions has increased. And for now, digitalization is not a preference anymore. It seems like it became a must. And it means that authorities should align their regulatory framework with the requirements of digitalization as soon as possible. And digital ID or remote access or digital onboarding, all these kind of issues should be solved in a very short period of time. And of course, if you ask the same question before pandemic, my answer that authorities should align their regulatory framework with the requirements of digitalization wouldn't change, believe me. But no, after COVID-19, I add the word as soon as possible to my answer. Because as I told, COVID-19 and the possibilities that the world can face similar things in the near future push all of us, not only the sector players or the private sector, but also the regulators through digitalization. But of course, it doesn't mean that let's make regulations in a way that everyone who mentions that they will promote digitalization can come in. Authorities still need to consider the risks. And the question is how we should make the regulations, how we should consider the risks. But if you want to provide relevant environment required for a developed digital payments market, we have to analyze many points and make regulations very carefully. It's crystal clear. But the most important thing is that we should take the trade-off between the managing risks and the increased costs into consideration. Because I believe, and my experience also shows that we can decrease the risks, we can mitigate them by making new and strict regulations. But we shouldn't forget that making new regulations always increase the costs and makes the business more difficult for stakeholders. So we should always keep the trade-off into consideration. So, but when we come to the question of so what dimensions or what kind of things we should consider, especially after COVID-19 and after the increase of digitalization, there are many points that we should consider, but I think because of the limited time, I will just tell that for me, the first 3 points that we should consider as regulators is the data-related issues, data privacy, the cyber risks, and also the big techs. Big techs is one of the huge things that I want to touch upon, because when we generally think about non-bank PSPs, we generally think of smaller sized institutions. But when we start to talk about big techs, we are talking about huge organizations, huge institutions, which have dramatic amounts of data. And with digitalization, as the classical word, data is the new oil. And we have to really consider the big techs while making our regulations. So before pandemic, it was the same. In the payments area, we were always facing with new kind of business models. And when I say new kind of business models, I'm not talking about facelifts of current and existing business models. I'm talking about all brand new business models. And all of these business models are using technology more. And when they use technology more, they are creating totally new models. And generally, regulators are trying to examine them and assess them under their existing regulations. And I think by COVID-19, this will change as well. And authorities will start to think about new regulations, totally new regulations to fit this kind of new business models. And COVID-19 will really push this as well. And one more thing that I would like to mention is that I am a member of the CPMI main committee at the same time. And during last 2 days, I have attended the main committee meetings, and I saw that all the authorities, all the central banks are trying to understand the new situation and try to see what will be the new normal, and try to assess what the new business models will do with respect to the rules of the new world. And I'm pretty sure that international cooperation and coordination will play a critical role in these activities. And I hope that we will all pass through this COVID-19 crisis together. And in order to be just balanced, just find the optimal balance between the mitigating risks and increased costs, we should always work together with our stakeholders. And this will be the key point to solve the problem, I believe.
Thank you, Emre. This was a very broad answer. Thank you for taking time to explain all of this. I'll just move on to Philip, who is managing he's managing the first regulatory innovation facilitator in Croatia. So it's an interesting concept. So could you just please describe to our audience what are regulatory innovation facilitators, and then maybe give me your thoughts on how can we balance this need for innovation, regulatory requirements, and risk management. You're muted, Philip.
No, not anymore. Can you hear me now?
Yes. Yeah.
So thank you, Slaven, for asking me question and kind of already giving the large portion of the answer within it, because I would like to define the innovation facilitators as a designated point of contact and team within the regulatory authority that's trying to help regulators face a balancing act. You know, the balancing act between the managing risks and between regulatory constraints and not halting the innovation, because it's not if you try to completely avoid the risk, then you're necessarily halting the innovation, but you must manage the risk, so you're helping innovation to facilitate, but with enough but with being cautious enough in allowing innovations to disseminate so widely that you can't anticipate risks, so you cannot roll back something that entered the market. I will try not to be the party breaker, but I think that for the years now we are listening about innovation and digital transformation in financial services industry. But something, it seems to me, maybe I'm too young, that something happened just maybe 2 or 3 years ago, because all these years before that we were just witnessing like digital offering on our screen of financial products, but everything behind that, like the backend processes, seems to be pretty much legacy systems. And so maybe it was easier to manage new risks just on the front side. But all of a sudden, something like 2 years ago in our regulatory entity, there were like really lots of inquiries and questions regarding questions we never saw before. Like we have experience with incumbent firms, of course, and they're developing something new, and they have large compliance offices. They know what regulation is and what they deal with. But all of a sudden, not just in our part of the world, but especially in Western Europe and United States, you have new types of entities. I think that Mr. Karpuz or already mentioned that, like you have companies that are not dealing with financial services, but they would like to integrate and offer financial services in their everyday business. You have new entrants, and of course you have tech companies, and they are sending inquiries asking what are the regulatory constraints and how can they enter the market. So we are witnessing some kind of, let's call it like disintegration of financial services. I don't know if that's the right term. And the risks are all of a sudden completely changed. What I mean by that is that like 10 or 5 years ago and today, most of our legacy systems in incumbent firms we know them. They are pretty much old, like 10, 20 years old, and conceptually speaking, all of a sudden some new entrants can offer financial services basically with a laptop. They can use cloud computing, but within the regulatory constraints, you can't do that. So you must match those two components, like conceptual component that technology is enabling someone to make and offer de facto financial services without a legacy system, but it's hard to incorporate that within the existing regulatory environment. So what I want to say is that we are witnessing many new subjects we didn't have opportunity to work before. And that's basically the reason to start an innovation hub or even innovation sandbox we don't have in Croatia for now, because we are pretty new market. But innovation hub is like a dedicated point of contact when you can communicate with new subjects, tech companies, and non-financial subjects, and trying to cope with new risks, trying to understand them, and to help them introduce new products in the market, cautious enough not to disseminate so widely that in the event of in huge risks, they cannot be rolled back, and at the same time, you would like to not halt the innovation. So that's the balancing act we are trying to cope with, introducing the special dedicated point of contact you are having now in National Bank too. So
Thank you, Philip. You touched upon a very important issue, which is that many new providers, it's for us as regulators, quite often we have to ask on and on, what is the service? What's the financial service that you're actually providing? And who is really providing what? Because there are technology companies, there are financial companies, and it's very much layered. So you have to kind of open it like a box, like babushka, box inside the box inside the box, to see what's really happening. And because where is the risk? It's very difficult to understand where is the risk, which is something that we try to say to our technology companies and financial service providers to see, with whom does the risk stay and how do they manage it. So yes, it's a very important subject. And as I already moved towards, IT companies who have a really large role in provision of financial services more and more, and their importance will only rise. So, Sunny, you're the CEO of an IT services company. How do you see the opportunities and risks for IT companies in relation to further digitalization and globalization of financial services?
Thank you, Slaven. And also appreciate the invite to this forum, and hi to all the attendees that are spending their free time watching us. So it's very hard to organize all these thoughts I had around this into 4 minutes. So you just sit back comfortably. I have about 50 slides. It will take a while to go through those, but it's a deep and wide topic. So I thought maybe I just start with a conclusion here. It's in a nutshell. I really believe that both opportunities exist for and because of, and are limited because of and related to the regulation, in a sense. So everything that we do is within the context of what's allowed and what's possible. So the game is always to make good decisions within that limited space, to make sure we're not building wrong products. We don't implement a solution that will fall within the boundaries, but also try to push those boundaries the right way and innovate within the space and create value where it didn't exist before with new business models, and many other panel participants have already spoken to that. So the question to me is always like, what is this gray zone area around the edges of current regulation that you can play in that hasn't been occupied already, and how will that regulation move quickly enough if you try to step outside the boundary? And I'm sure some other panels will have much more to say about it, especially those who are building products. So that's kind of my conclusion. I think it's all related to that. So then you have to segment out your thinking into different parts of the industry and your organization and your company. I'll try to speak to that for a second, for the next few minutes. So definitely, with the COVID situation, we've seen acceleration, or at least talk of the acceleration of digital transformation. Now everybody's jumbled into what digital transformation is. I think everybody has their own idea. I think we probably could spend a whole day talking about what it really means. But the immediate impact of what we see is that banks, just like any other enterprises, have immediately rebalanced their investments. Projects have slowed down. Projects have been pushed out. Only things that were almost done continue. And while there's still interest, and which basically reflects into our pipeline of engagements, there's definitely sentiment that the wait and see situation. So while on the other hand, things are changing rapidly in terms of how value is delivered, the business models, and how we operate as a society and also as businesses. So banks have to adjust while they're also trying to play it safe in this case. And I think the biggest thing is that it's they're going to be pushing us much more into declaring the right level of ROI. How much savings is going to be there, what are going to be the impacts on revenue, and now the split between the short-term wins that we have to do right now that to enable the immediate impact of remote workforce and inaccessibility of branches and things like that, versus something that's more medium term. So what underlies this whole thing is the idea of the difference between commoditization of IT and innovation, obviously. And so I think we passed the point where basic digital experience on the web and on your mobile phone is considered any kind of innovation. That's commoditized. There's not much you can do, and everybody has to have it. So the question is now, how do you go past that point? Especially the difference is obviously there's a difference between big and small. If you're an incumbent player and established player, then you have different things that you're trying to balance, because obviously you're addicted to your revenue streams, first of all. So you're trying to change the game. Digital transformation is not just putting a lipstick on a pig by creating a website. You're being pushed into cultural change that underpins this, and I think it was already talked about already today. So the cultural change really drives the ability to respond properly by internally changing your business models and capturing the value that can be generated like that. For smaller companies or fintechs and new entrants, obviously they're all tech. They exist because of technology, right? And they actually push from the other side, push against the regulation, but also create nibble at the edges of the market, trying to get those crumbs off the table that they can get into, and can basically showing big players what can be done. So we have that interplay between innovation and commoditization, and I think right now we're getting to the point where commoditization of services is getting even higher and higher and higher. So just having a website, a mobile app, that means nothing right now. What I want to say, so it's really basically about clicks and not bricks anymore. That's kind of the way we look at it. People also talk about onboarding of customers, digital onboarding. I mean, even that is almost commoditized in some aspects. I just moved recently to Amsterdam, and I was able to get an account with Bank, fully mobile. They don't even have a branch. I don't even know where their office is. I was up and running with an account in about 5 minutes over my mobile phone. So that's really not anything that we can say it's innovation anymore. And obviously, I'll have to I think accelerate to some of the other things I want to say. But I think the picture is so complex that for the IT companies, there's a big difference for IT companies that are building products and those that are building services. Right? And so for us that are building services, we continuously try to understand what we can do on two sides of the story. One is the product, helping companies build new products, meaning helping their revenue. And then also what things can be done on the cost and operation side. So there's definitely, one is more on the digitalization and innovation, one is more on the operational efficiency. But when we try to see things that are common for both sides of the story. So for big players such banks that we work with, we see that basically the flow goes like this. First, we need to free up the data because it's locked up in these traditional backend systems. Then we have to create a set of enablers on top of that data through which we can start to create value scenarios. And only on top of that, we can start to create some really truly innovative solutions. So there's definitely a multi-step process which starts with creating API gateways, API connectors, identity providers, all these different things that basically exist in Backbase, for example, but not everybody can own Backbase. So for smaller banks in our region, I think that is the path, and that's the messaging we're trying to deliver to them, that we can help them along with that story. So it's really a question of whether banks want to become true players in innovation and they want to accept the loss of revenue in certain channels and then open up their data to integrations and try to change how they make money out of the whole thing, or they're going to hold it back and jealously guard it and think that it's digitalization just because I have a website that you can make a payment on. The key, I think that's fundamentally, it's really the key challenge that we're seeing here and how to try to navigate this story. The way we see that IT companies need to position themselves going forward overall, I think the areas are clear. And I think some of them most of them have already been mentioned. So AI, fraud detection, analytics, and the whole thing that goes under the name of data. Obviously, the agile delivery, focus on short time to value, getting quick ROIs, quick wins. No one has time and patience for two to 3 year projects anymore. Continuous deployment, DevSecOps, front-end, innovative front-end client applications, all that stuff that's already been mentioned. It's really, we've tried to bring that technology expertise into new domains, into this innovation space that we allow to play within based on regulation. I think the last thing I want to say, specifically to some of these things I was going to talk about, it's for us, the thing that we see is that really this inertia that we see with banks, especially, and their quite reasonable and expected inability to hire and retain and train the right talent. It presents an opportunity for IT companies to properly position their service offering and their accelerator product and engage deeper in a partnership-like way for long-term collaboration. That's kind of how we see from it. And then how far we can go with the whole innovation story based on these 4 steps we're trying to walk. It really depends a lot how fast the regulation can catch up with us.
Again, you unboxed a lot of stuff. I especially liked how you mentioned this thing that it doesn't go overnight, and if you would like to now digitalize in this shotgun sense, it just doesn't go that way. You can make a fancy website, you can put lipstick on a pig, but to free your data in the backend, it's just going to last for a couple of years, and it's a difficult proposition. And I'd like to move to Amir, and you have a lot of experience in IT industry, and digitalization has been here for years and years, but it does seem to be accelerating either voluntarily or involuntarily. So what's your opinion on opportunities and risks for IT companies in relation to further digitalization and globalization of financial services?
Thank you, Slaven. Hello to everybody. Actually, when we talk about digitization of the financial services, actually we are talking about reaching the service through the digital channels. The financial sector is not the unique concerning that approach to the service. Telecom sector is one step beyond of the financial sector, and what I would like to share the experience also which telecom sector shares with the challenges of digitization of financial sector services. So when we talk about digital service, we talk about electronic delivery of information across multiple platforms and devices, like web or mobile phone. This is not the new thing. So what we should actually experience now, from my opinion, is something like what was happened when we introduced the smartphone as the equipment or as the tool for the citizens, or for the lifestyle. So the opportunities for the IT companies are actually unlimited. Especially because on the markets which are more underserved. So I will just give one comparison. Everybody heard for the M-Pesa service. It's actually SMS banking, but it's actually provided by Telecom from 2007 in Kenya. Actually, that service provides a customer to deposits, to withdraw the money, transfer the money, pay for goods. So now we have the same thing, but on the smartphones, using the smart applications. Also what I experienced a few years ago in China. Actually, when I walk on the street, some homeless people ask for help. So we say, sorry, we don't have a cash. And they provide us with the QR code and ask that you scan it by the smartphone and just put the amount and send and press the send. But this is what I learned also in the past, is when you develop application, you should have at least maximum 3 steps to finish the service. And if the response is longer than 1.0 seconds, 0.7 seconds, actually it becomes boring. So those are experiences which should IT companies also respect when they develop the smartphone applications in IT companies. Also, what is, let's say, what's repeating? When the Apple innovate the smartphone, actually they use the term ROE, but it's a return of experience, what we learned in the past. So what we see now is that agility, which we have now as a society, is actually people-led, but technology supported. What we should be careful is actually we should put the customer in the heart of everything. Why? Because customer is actually it's a subject who use the service, who access the service, and actually the whole ecosystem lives from the customer. People do not change behaviors, but they are open for the new kind of the world. I was in one project 7 years ago. Actually, it was mobile wallet. Technologically, everything was perfect. What was the problem? What I found as a problem is that customers don't want to come to office and to change the SIM cards. At that time, actually, the security element was on the SIM card. On the other side, now we have the applications, and actually encryption is based on applications, which means from customer point of view, it's more comfortable. Don't need to make additional activities to get some results. What's also important is actually, as Sanin said, we have the business model. We have now 6 business models, as I see, in the financial sector, from platform-based business like Amazon and Alibaba to the incumbents who actually are introducing their own digital banks. The same happened in telecom sector. So what's also important in that case, actually, it's the cloud. And what the telecoms did, they also transformed the core business, core elements to the cloud. So what was the results which, for example, I also reached is actually that we made time to market reduction up to 50% for the digital services. Also, we reduced the cost of ownership for 20%, which is also very important in those times when actually the COVID, caused actually the problems with the revenue and with the profitability. Also, what also we increased with the cloud technologies is actually we reduced the fallout for 30%, which means that services are more sustainable. Why it's important? Because digital service, it's not mandatory that service should be available 24/7 on 24/7 basis anywhere. What also was driving force in telecom was for 5G is 5 any, which means anybody should access any service from any place at any time from any device. Is the same thing for the financial sector. What's also important is that actually FinTech is going to drive 5G, because 5G is the first technology which is not developed because of the human, it's because of the device. So what people will need to make payments, to get the credit, to put the deposits, how they will do? They will do it.
Amir, could you maybe go a bit towards the end?
Sorry. Okay. So that's it. The risk, what we see actually as a risk is actually regulatory compliance, because this is what reduces the opportunities, and also culture of the market, the whole market, because it's also showed that culture remains the biggest barrier in the digital transformation. So that's it. Sorry if I expanded.
No, that's fine. I know from my own experience that when you're on the stage, then time just flies.
Okay.
Thank you very much for this. You have a good insight into telecom industry, and those parallels are very interesting. Certainly the most influential consequence of these emergency measures related to COVID in the context of digitalization was a huge rise in the work from home. And there are many things to say about work from home, both positive and negative. So let's start with the legal perspective. Naida, you're a lawyer. You advise companies on digital transformation. What is your opinion on the infrastructure for so-called infrastructure? But what I mean is everything that's included, all the prerequisites for full remote work. What strengths, weaknesses, opportunities, threats do you see?
Thanks, Alan. Hello, everyone, and I promise I will not bore you with the legal stuff that are interesting to me, but not to the rest of the world. Going to your question, if there's anything positive about the global COVID-19 pandemic, is that it was a very good indicator as to where we exactly stand in terms of digitalization, in terms of use of innovative IT solutions and related remote work that we were facing. I think we can all agree that the social distancing limitation simply intensifying the demand for digitized service, not only just in financial sector, but also in general, and forces all to recognize and adopt the work processes and for the time being at least, almost full remote work regime. So although the social distancing, these limitations are being slowly lifted and we are going back to the new normal, it appears for the time being, I believe that also Namik mentioned that people actually like working, the flexibility and comfort that remote work provides, and would like to keep this up in the future, meaning that this remote work will become the new normal. It will also give companies more flexibilities in terms to move according to business needs, etc. As I said, the pandemic actually showed us where exactly we stand, in particular what works well, where are the threats, where are the obstacles, what needs to be improved in order to enable actually this remote work, also from a legal and regulatory point of view. If we talk about the legal and regulatory point of view, it's important to note that this is not one or three sets of documents, laws that substantially regulates the matter. It's a full range of legal acts that address different aspects of this kind of work. So you have matters starting from HR, employment rights and obligations, etc., then moving on to data protection and privacy, managing fraud, securing electronic transactions, AML matters. You have ensuring validity of contractual arrangements and documents, court enforcement aspects, etc., etc. So it's a full range of things and topics that need to be addressed. However, boiling down, if we talk about this remote work for financial services, there are two common threads, I believe, that are fundamental for enabling this kind of work. And that would be the electronic signature and remote identification. These are, I would say, the cornerstones, and then we can build up on that. These topics, important questions, obviously, in all our countries, in all our legal regimes. Some are more advanced compared to the others. If we talk about Bosnia, we are unfortunately lagging behind in the implementation. I believe we had a lot of talks over the past year or so, especially about electronic signature. In the latest months, it's obviously intensified the discussion. The thing is, we have a legal framework. It's not ideal. It still needs to be harmonized with EU legislation. I believe for Croatia and Serbia and other neighboring countries, they're more advanced. However, we have the legal framework. It can be used as a legal basis and then build up on that. Since last year, we also have the first verification company. There are technical solutions that are not up to date with the latest developments, but still can be used as a basis. The problem, however, that obviously we have seen in practice from our clients and also from the community is that raising awareness and institutional support, these are the things that are lacking. So we as a community need to move away from the notion that the business needs to be done paper-based. We need to adopt ourselves and our mode of business to start adopting the new IT solutions. Without that, I believe that we will still be tapping more or less in the same space and we will not be able to move forward. As to the remote identification, that's the second thing. Unfortunately, I believe that other countries, especially Serbia and Croatia, they are far more advanced compared to us. In Bosnia, we don't have the legal framework for that. There are laws that are being in the procedure, they're being discussed and so on. But until that happens, I believe that, we'll not see much progress. But these are the fundamental things that we need to implement, and thereafter, then I think we will be able to catch up with the others, and at one point also enable this remote work.
Okay, thank you. There are a lot of, as you mentioned, the legal surroundings about electronic signature and how is it really implemented. There are many questions about it. I'm looking at Q&A. There are at least two related to that, and I'll try to come to that topic later on after we finish this general part. But it's obviously very interesting to the wider public.
Everybody's wondering about that.
Oh, yes. Now, Sanin, you were quite active on LinkedIn during the last couple of days on some issues related to remote work. I see that's an important subject for you. So full remote seems to be a good fit for software development. I mean, what are your experiences? What about Agile? Can it work in fully remote? How do you see all that?
Thank you, Slaven. Yeah, that's what happens when you drink too much coffee, when you end up writing those nice LinkedIn articles. But absolutely right. I think we experienced, as much as we were already capable of doing remote work, the extent to which we had to do it at this point in time was new to us. So definitely there was new experiences for us as well, which probably for companies that were not that tech-enabled and ready was probably even, clearly much worse. So yeah, overall IT is, product companies and IT space and services companies, we're a good fit for it. I mean, it's just, as Mr. Hurler already said, cloudified delivery. I mean, we build those solutions and approaches for other companies. Obviously, we better be dog fooding it ourselves. Just anything with software is by definition tech-enabled, distributed, and agile. So we really saw no impact there. And, I didn't do too much research to throw numbers at you, but I did find that Slack did a quick research back in mid-March, and they said that 18 million knowledge workers in the U.S. went remote, above and beyond what was already. It's probably that number might be multiples of that by now. So it was a really huge impact. As we all know, Teams was failing the first few weeks of COVID. They couldn't even scale all the chats. So but I want to say something else as far as this full remote, full work from home in the COVID environment, and that's not the same as regular work from home. Most of us work from home or had flexible work environments for many years now, but I mean this is a completely different situation. Right? So the levels of stress and fear that exists right now around COVID, it's impacting our ability to work as well. And then having living in a cramped, relatively small apartment. Not everyone lives in big houses like they do in the U.S. Having just maybe having a hard time finding it quite office corner, and having kids at home. For many of us who have small kids, I have 3, so you can only imagine. It's not normal. It is not the same thing as saying just have tools and work from home and it's going to be fine. Many people reported having a very hard time adjusting, and I'm not talking about our company, which people did report, but saying in general that I've talked to many people in my network about that. So it's just not having the setup that you used to. The different dynamics at home, when do you take breaks, how you take breaks. It's just lifelong learned pattern of separation of home and work life. It just disappeared overnight. So now, yeah, it's cool. You can wear sweatpants and maybe you can take random breaks here and there. But I think there's actually much more stress on the back end of that than enjoyment of being at home in this situation, of course. So the well-defined separation we had in boundaries that we had. About home and work with different protocols and expectations, that all just got erased and removed. And now we just can't expect everyone to be willing or able or interested in accepting the responsibility for their own self-management in this sense, where there's really no supportive environment around them. I think that's one of the big important things to understand, that as we move out of COVID-induced work from home, what is going to be the new work from home, which obviously, hopefully, once kids go to school and things free up a little, it will be less stressful. But for us, for many other software companies working across time zones, that was really nothing new. But there is definitely a couple of things I want to say about Agile in full remote. And again, for many companies, that's not a problem. But for certain companies that are also tech-enabled or even producing technology, it's really the distributed Agile, as we call it, exposes process flaws. There's no way to hide. You cannot paper over certain organizational and planning inefficiencies by just having a water cooler conversation. So that really forces the organization to go to the next level of Agile. It's truly properly organized, and that removes the chance for command and control. It's much more. You have to have a much more trusting environment, and you also have to have properly documented communication at all levels. And so it's putting a strain on some companies that would like to say they're agile, but there's really no dark corners to hide in as far as the process and delivery in this organization of work. So I think those who make the leap to that next level and reorganize, if they haven't been there already, they'll come out stronger out of this whole situation. A couple of things that I found when I was looking some research that stuck with me is that GitHub pushed out numbers that show that there are more pull requests, meaning productivity went up. People are just writing more code. And their last check-in, the last code that they pushed was later, 1 hour later. So the conclusion would be that people are working longer, maybe taking some breaks in the middle. That's hard to tell, but they definitely seem to be producing more code. On the flip side of that, it's been shown or discussed that less releases are being pushed out in production. So that kind of raises an interesting question. Does that really mean that things that are activities that require coordination now are harder to do? Programming is solo sport. You just sit in the corner and code, and of course you can write. You can do that better when no one's knocking at your door every day. So things to do. I mean, just pick the right tool set, upgrade work practices, working agreements in terms of agile development, definition of done. All those things really come to the fore. And when it comes to basic communication practices of using video as much as you can and trying to socialize and having company meetings that you just talk about random stuff once a month or once a week, it's really good. I think the biggest challenge is going to be if we consider that companies that are saying that are successful right now, extrapolate that to me, they will be successful in the future in this model, because we had formed teams already when this happened and most projects were already stood up. So it was just basically carrying over those work practices into a more distributed way. If you have to start hiring, when you start hiring and bringing new team members on, starting new engagements, I think that the whole cycle of form, storm, norm, perform for those teams will be tested if you have full distributed. So we'll expect some pullback and new practices from the HR will have to be designed to support that. I want to finish with a very important thing on
yes, please do.
Just mental health. So I want to say that everybody, I think, should be focusing on work-life balance. The burnout is real risk here with all these additional hours. And so I think all the companies that are doing this need to pay very serious attention to mental health of their employees.
Thank you. I mean, it's been so great and enlightening. And as a father of 3 small kids, work from home is another level of something. But just to keep moving on, thank you very much, Tanya, for this. Just to keep moving on, Amir, what are your views on human resources management and potential changes in this area of actually age of wider acceptance of work from home? Sorry, we can't hear you.
Sorry. Is it okay now?
Yes.
Sorry. When we talk about work from home, we are actually talking about changing the culture. This is actually the new situation, new challenges. First is a relationship between employer and employee. So what's the, let's say, mandatory? Now employer must give the employee confidence that he will do the job and deliver desired targeted results. It's totally different when you are working from the distance. On the other hand, also employee must be sufficiently responsible to perform and work in the manner and the dynamics which is required by employer, which means you should provide the daily plans, also you should reach the weekly or monthly plans. What is also important, we are getting the demanding customer, which means when you are working from home, you should apply some new techniques like multitasking or dejobbing. You should authorize actually the employee to make some decisions, which actually that employee did not did in the office before. Also, what's important is actually that, as Naida said, we saw the actually short-term advantages, but looking on the long run, for sure that we will have some problems with the psyche of each employee. So we should have a special mindset. We should take care about special skills like courage, like resilience, like claim, adaptability, creativity, decision making, and stress management. Why? Because customer experience is at the end most important. That's the point of our business. So what's also important is actually that we should prepare some job analysis and taking into account all of those things, and also some leadership challenge will be actually managing the virtual teams. It's also special techniques because each team should be multifunctional or may consist of people from several departments. So actually, just to conclude, actually, we should actually forget the silos in the companies which we have when we are basically in the office, which means finance department or technical department or whoever. We should break down those silos. So this is what I see. Thank you.
Okay, thank you. Yes, there is a lot of this difference on how do you cooperate outside of those silos, and what you have to do before moving efficiently into work from home or work remotely. However, I mean, there are so many things that can go good in a good way or in a bad way. And there's, as I said, there's much to say about opportunities, but there are cybersecurity risks, as several of you already mentioned. So that's why we already have a cybersecurity expert on this panel. So Bojan, how do you see cyber risks arising from end-to-end, from two things? First, end-to-end digitalization of financial services, and then of remote work, because both, I think, bring in some risks.
All right. So hello, everyone, and thanks, Slaven, for inviting me to attend this panel. You said that there are good and bad things about working from home and digitalizing everything. I guess I'm here to speak about those bad things, right? Because someone has to be on that side to kind of, scare the people a little bit. So first of all, I must say that I'm a big fan of working from home, right? So I kind of like that. That being said, in the last couple of weeks or couple of months, actually, with the recent developments, it was interesting to see how many of people from my own company, some of guys from my team who actually do penetration testing whole day, every day, after a couple of weeks of working at home, they're actually looking forward to coming back to the office. So that kind of tells us something about how people feel about working from home, but obviously it doesn't address the risks. So let me first talk a little bit about working from home, and then I'll go back to the whole process of digitalization and everything. So with work from home, what I've seen in the last couple of weeks and months actually is that the number of attacks and incidents actually grew quite a bit. And I personally try to stay away from forensics as much as possible, and there is one very simple reason for that. Every incident happens on Friday, right? Incidents never happen on Monday. So if any of our listeners are thinking of hacking something, please do it on Monday, right? So when we do forensics, we have the whole week. Otherwise, it will be Friday, and then you ruin our weekend, and that's not fun. So the number of forensics I actually had to do in the last couple of weeks grew quite a bit. And I'm talking about companies in our region, right? So I'm not talking about the whole world. I'm sure that things in the States or somewhere else are even worse. A lot of these cases that I actually worked on, I wouldn't say that the main cause for them was work from home. I would just say that basically the attack surface is now so huge because you have a number of people who literally overnight had to take their equipment, go back home, and now all of that is not in control of their companies anymore. And one of the big incidents I worked on last week actually involved one of the employees of a company who started working from home, and that particular employee never worked from home before. So they literally delivered the whole workstation to him. It wasn't a laptop even. Just the person simply clicked on certain attachment in an email, downloaded something from the internet, it wasn't recognized by the antivirus, and after some time the attacker managed to establish connectivity to the person's workstation and then used that to relay to the company's internal network. Now, one of the problems here was that the whole work from home setup had to be done overnight, right? Which means that for a bigger company, if you want to have all of your employees work remotely, you actually have to abandon some of the security best practices that we will recommend. So for example, if you ask me how to do it, I would typically say, okay, don't allow so-called split tunnels. So where your employees are connected to your company network, whole traffic must flow through a company network. That allows you to control it, that gives you visibility and so on, which kind of works okay if you're a small company. If you're a big company that typically has, I don't know, 200 people working from home, and suddenly you have to send 4,000 people to work from home, you simply can't do it. You don't have infrastructure to do it. You can't do it overnight. So the whole attack surface is now actually much bigger. Besides that, with work from home setup, we now have a much bigger risk of data leakage. Everything that people are working on is now simply, on their machines or visible from their machines, something that again we didn't have previously, and simply now we have new risks which are stemming from this, which we maybe didn't have to think about previously. So one of the big issues that I see with work from home setup is that a lot of companies had to rush into this, and they didn't properly assess risks which are coming with this. And it might be something that will actually, come and bite us later, maybe in 1 month, maybe 2 months, and so on. But definitely the number of risks is much higher. So I'm not against it. I think it's a cool thing, right? I like it personally as well. But I think that every one of us, especially those of us in bigger companies, must think about, which risks we have now and how are we correctly handling those risks. Simon talked about developer companies, and I've seen many good and bad examples. I've seen good examples when people really take care of their source code, when they have good rules around, pushing everything to repositories and so on. I've seen horrible examples where everyone has access to absolutely everything, when people are administrators everywhere, and such examples became much worse in the last couple of weeks because, everyone being remote, if something doesn't work for you, you now instantly have to fix it for that person. And quite often that fixing involves disabling some security controls that we might have otherwise. To just briefly address the other question you had, because I'm kind of running out of time now, and I know that Slaven is nervous right now about finishing everything. And we do have a section about full supply chain, going into digital for the last section of the panel. So just to address that a little bit again, from my point of view, and when I just look at security of the whole systems, again, this increases the attack surface that a potential attacker has. So again, in the beginning of the panel, we talked about the number of attacks, and I also said that the number kind of increased a little bit. I maybe think that the general number of attacks didn't actually increase, but now, even for those opportunistic attackers who are just blindly sending, emails with attachments, with everyone working from home, with everything suddenly becoming digital, right? It is much easier to maybe gain that initial foothold into an enterprise than it was before. Because before, when everyone was in your building, everyone was at work, it is a little bit easier to apply security controls that we want comparing to what we have now. So while I love everything being digital, and I think one of the participants, I forgot who, said that once you pay like a bill with your mobile phone, there is no way to go back, right? Once you go digital, you don't go back. And I completely agree with that. So I think that this will increase in time. We must not underestimate what security challenges we are facing here. So I think that we should definitely, maybe now as things are getting into new normal, and I hate that new normal phrase, but we should maybe now that our businesses are slowly functioning properly again, spend some time to assess those risks and hopefully correctly approach them, because we don't want, I think no one here wants to have the same situation as our a big oil company had at the beginning of February, and I'm sure that everyone knows what I'm talking about. It was in all the news where they got all the servers encrypted, and this just shows that it can happen to absolutely everyone, no matter how small you are. If you have 5 employees, you are a potential target. So we should pay attention to that.
Thank you, Bon. Yes. On one hand, you like work from home. On the other hand, it's going to bring new business, so it's good for business.
Well, for me, it's kind of a win-win situation. Absolutely. But still, as I said, I hate forensics, and I don't want to see or hear people calling me and asking me, "Hey, we just woke up today, and all of our servers are encrypted." And this happened to me 2 weeks ago. There was a manufacturing company in Croatia, not a small company, 200 employees. So we are talking about decent-sized company, where on Sunday morning, they called me and said, "Hey, all of our servers are encrypted. We found out because our mail wasn't working, so can you help us?" And unfortunately, I cannot. So I don't like having those calls, so please pay some attention to security.
Okay. Thank you, Bon. Thank you. But when we talk about cyber risks and cybersecurity, there is a lot to say about identification and authentication. So, Robert, that's your area of expertise. Would you share with us how do you see identity management issue in relation to digitalization of financial services on one hand and remote work arrangements on the other hand?
Yes, sure. Hi. Can you hear me?
Yes, I can.
Okay, I will just turn on my camera right now. Sorry. Okay, I guess it's okay, right? I mean, can you see me now? Is it okay?
Yeah.
Yeah, okay. Let me just address the first part of your question, but before that, let me just show you this. Okay?
Okay.
So, yeah, the thing about digital identity is that it can be faked very easily with the minimum funding and minimum creativity. You can do a lot at home, and with a little more funding, you can do even more. So, it was way different when, like 20 years ago, when you came to the bank and you gave your ID card, and then the teller identified you, looking at you. We only saw identity theft in those scenarios in Hollywood movies, but now when you have internet between the teller and the customer, a long cable of indefinite length, you can no longer be sure who the person on the other side of the screen actually is. So, it is really a whole new different ballgame for the financial institutions. And not only that they should be sure the identity of the person, they must be sure, because anti-money regulation is very strict. It requires them to be sure who the person on the other side of the screen is. So yeah, it's a difficult game for banks and for everybody who wants to establish digital identity. In general, conceptually, to establish digital identity, you need to go through basically 3 phases, or there are 3 concepts there. First concept is actually claiming identity, which is simple, which is straightforward. It can be done through keyboard. My first name is Robert, my last name is Ilyash, or it can be done by OCRing your ID card with machine learning, just getting the data. Claiming your identity does not verify. It just says your name, last name, your personal details. Now, verifying identity is the difficult part, because that's the part of the process where you need to be sure that the data that was previously entered is correct and is tied to the person who is claiming the identity. So the verification process is much more difficult. There are 2 subsegments of verifying identity. One is to verify the data that was entered before. The used case is scanning your ID card and then somehow verifying it. This is actually the only thing that is technology-wise partially unsolved. You can credibly verify data from, for example, from passport, because the passport has NFC and you can read it and it is digitally signed, so you can be relatively sure that nobody has tampered with the data. But in order to get the data from the ID card, which everybody uses, you need to use the camera from a mobile phone and therefore it can be easily faked with a plastic, cheaply made plastic that just requires a couple of $100, and probably the camera will not be able to recognize the difference. Now, the thing that is now on the leading edge of research is machine learning algorithms that will be able to recognize the hologram and the security element on the ID card to be relatively sure that it is not a fake ID card. So, okay, now let's say, for example, that you're sure that the ID card is not fake. So the other part of the process, of the verification process, is that you have to make sure that the person in front of the device is actually the person holding the ID card. So face matching is one part of the solution, but that's not the complete thing, because face matching is working very well. Machine learning is better than real life people, so machine learning algorithms can be sure about two faces being the same person better than the real person doing it. The issue that also was kind of an issue, but it's not there so much anymore technology-wise, is liveness detection, because you can easily fake the algorithm, but as you saw, by just presenting a screen from your device or a printed out photo or maybe a 3D mask or something. Now the latest and the newest algorithms are able to detect that. So we are now in a phase where we can relatively be sure that the identity of the person on the other side of the screen is, the real person. If you combine that with the data gotten from NFC, and you do a machine learning test of liveness, you have a pretty credible verification that that the person behind the screen is the true person. And the third part of the identity process is the authentication thing. Now, authentication has actually been solved for many years now in terms of mechanisms that exist. I mean, we all know that regulators now and basically insisting on two-factor authentication. So you need to have two factors of different kinds, something you know, something you have, or something you are in any combination. But also, I believe that the future will bring us to three-factor authentication. So you will need three factors, which you can credibly define that you are who you say you are. The thing here is that there is always a balance between authentication and frictionless of user experience. As is always with security and with user experience, one affects the other. So you need to find a balance in between those two. But I believe the biometrics and the biological characteristics of your body are the way to go, because in the long run, I think they will offer the most frictionless experience. And and basically, once you've solved identity, then everything else naturally sits into place. Then working from home is no longer an issue if you credibly can identify yourself, requesting services as well. I think that you guys saw, there was about a month ago, there was this funny video about a guy in a video conference that used deep fake to fake his face like he's Elon Musk. So this was the first usage of deep fake technology used in real time. So it was just like I'm streaming video stream from my camera now. The guy was streaming his camera, and he just put the face of Elon Musk on his face, and it was real time. And the guys on the other side were really, what is going on? Who is this guy? So the technology, is progressing, and also therefore the anti-spoofing technology is following that. It needs to progress too, so that you cannot just fake it. But the big picture is that once you have the credible digital identity, then digitalization, digital transformation of society naturally just follows and sits in the place.
Thank you, Robert. You gave us kind of a short education on how this identification and authentication work. So yeah, I think it's going to be useful for many of our attendees. Philip, can regulators work remotely? What are your experiences with that?
Of course, I can only speak from my perspective. But I agree with previous panelists that some of them said that it's not just a technical or human resources issue. It's maybe even more, from my side, legal issue to work from home. And I would say not just the digital signature, which is a widespread issue, but some specific regulator supervision powers may be hard to do on a distance remote work mode. Like from my personal perspective, I can work remotely because I'm dealing with international relations and fintech. But when I was in supervision, maybe I can give you the counter question. You are dealing with supervision, as I know. Maybe the supervision is a different beast. Because when I was working in supervision, in a real-time supervision of capital markets transactions, stock exchange, etc. So you have, by European directives, you have a legal obligation in certain times to suspend trading as a regulator, for example. And the COVID-19 situation, that was the widespread situation all over the EU. So it was a coordinated action between the national competent authorities to temporarily suspend trading because the prices were like falling like crazy, and to cool it off. And it seems as a pretty big challenge to do that remotely, because you must coordinate your team of the people inside the regulator, and you must communicate with the marketplace and with your colleagues in other national competent authorities. Of course, it's already all digitalized, but we are talking about very sensitive things, and those financial instruments, maybe in Croatia not so much, but they are collateral for almost all financial system. And if you are halting their trading and you're frozen their price, basically, so it's a pretty sensitive job. It may be a challenge to do that in the future, and the COVID is the perfect example for that, because I think that we halted that for 2 or 3 times, and other national competent authorities did a similar work. The other part that maybe the smaller markets don't have so much is the product intervention measures. For example, the short positions. You have the obligation to ban the short positions in certain debt papers, especially government papers, when everything is like completely going to the roof. And if you don't ban them, that can cause much more trouble if you let things not to cool off for, I don't know, 1-2 hours maybe, when the market have all the information about the pandemic, etc. So that's another job that's specifically supervisory job that comes to my mind as tricky to do on the distance, because you must coordinate a pretty large amount of people at a time. And the third is maybe more familiar to you, even if everything that entity you supervise is doing is end-to-end digital. I believe there is still some situations you must go on site. You must have the access to the premises, or to the hardware, or to the paperwork, to the people that are behind the screen. And if we are living in what they call the new normal for, I don't know, maybe a few more months, then how will you do effectively the on-site supervision? Maybe that's more the question for you, but that's what comes to my mind. But to close this, I think that most of the job can be done remotely. It's HR problem and technical problem, and as the time goes by, the solutions are better and better, but those few types of the specific regulatory issues can be legally and technically hard to do. Thank you.
Thank you, Philip. I agree with you. Yes, most of the things can be done, but there are some things that, like on-site, that still seeing is believing for some things. Now, moving on, we still have some 50 minutes left, and I think that if we are reasonably quick, I think there's going still to be some time for questions from the audience, which we have several interesting questions. Now, moving on to e-commerce. So if you looked at the CVs of our panelists, you could have seen that at least half of them are closely involved in provision of payment services. So the next part will focus on future of e-commerce, point of sale transactions, and cash. So Alexander, in your opinion, how does the future look like for e-commerce? And what about e-commerce versus cash perspective?
The short answer is future is brilliant, definitely. But again, it's a very multidimensional problem, and today we already discussed how to combine risk, convenience, and safe. And I just would like to focus on few solutions, not just about our organizational solution, but about some kind of industrial standards of the market we have to take into account when we're talking about the e-commerce segment. First of all, as I already said, for e-commerce, extremely important this so-called consumer-centric solution. When we just think about the end user, how this end user experiencing and paying the whole cycle of e-commerce transaction, starting from the just willingness to buy and ending with just click, just I done my choice. And here a lot of problem and a lot of opportunities. And by the way, there are a lot of also tools available on market how to adjust it in a better way. For instance, if it comes to safety, one of the pillars at this moment it is so-called the e-com tokenization, when we replace with token some kind of surrogate data, real card credentials. And instead of storing real card data within partners like shops, merchants, payment scheme may do this on their behalf and replace this very sensitive data. The second very interesting topic about the e-com and how we may finally get to this one-click solution is this new standard, and Visa is one of the co-founder. It's secure remote commerce, SRC. It's again aimed to bring this buttonless experience when someone who already pre-registered may make payment just in one click. The third very important initiative at this moment enrolled on many markets, and we as a company also introduced already this mandates. This is regarding so-called 3DS second edition. In a nutshell, it's a shifting in paradigm when definitely issuer may authorize transactions based on many parameters and use this so-called risk-based approach. And finally, ultimately, it will come to more safe and more simple customer journey again. If we will succeed there with all this, at least this, because it's not everything, we have some additional layers of security and additional layers of initiatives regarding e-commerce, we definitely will improve customer journey and bring the same experience which we have at this moment. With, as I already said, in face-to-face environment. Because even in face-to-face, if we look at history before, we as a financial industry spend a lot of time how to evolve from just not very safe but easy transaction with magnetic stripe card and bring very completely convenient solution like contactless, which very reflects current situation when we also thinking not just about the payment, but also about some kind of hygienic problem which are related to COVID-19. It's a one problem about security. The second problem, let's look at SME sector, just small and medium enterprise. If we would like to bring them to e-commerce, not just about enabling payment, we have to bring and have to introduce them to marketing, to web or applications. We have to introduce them some kind of gateway. We have to introduce them to some kind of marketing. And there is a lot of ways how to do it. Bring them solution, offer them marketplace, offer them some kind of electronic invoicing program just to simplify payments. It means that a lot of dimensions and a lot of aspects of this problematic. But as I said, future is very bright, and this dramatic changes, recent changes, definitely will accelerate and will give this sense of urgency to everything what is around e-com and digital transformation.
Thank you, Alexander. So the future is bright. That's great to hear. Let's just see if our regulators on the panel also agree. So Emre, you're a payment services regulator. So how do you see the influence of COVID and digital transformation in general on more specifically ATM and point of sale transactions, but you could touch upon digital, the e-commerce issue as well?
Okay, thank you, Slaven. So it's great to hear that Alexander thinks that the future is bright. So bright from which perspective, of course, it will change. But we believe that the future is bright, and we believe that the future is digital. So there's no doubt on this. So, and many of the regulators believe in this. Before starting to talk about the effects of the pandemic on ATM or POS transaction, let me say a few sentences about technology and digitalization. As all of us know, digitalization is not a post-pandemic issue. So technology and digital transformation is in our life for many years, for decades. So, and they are changing people's habits and firms' activities for many years. They are not only changing the ways in which people produce, but also how they buy goods and services. So the new technologies digitalize our daily tasks in every sector. And in the digital era, financial, economic, and even social inclusion depend on technological inclusion. So if you have this, and if you have internet connection, then you are included in every sector. Like you are financially included, you can be financially included, you can be socially included, and you can be economically included. And today, the pandemic, which is affecting the whole society and economy, has also strong effects in payments area. And it changed payment habits of the society as well. As a consequence of the COVID-19 crisis, the importance of digital services and the FinTech innovations have become more obvious, of course. But there are some studies discussing that FinTech startups are product of financial crisis. It's possible that you don't agree with this thesis, and you don't agree that FinTech startups were a product of financial crisis. But I believe there is no doubt that their growth was fueled by it. The growth of FinTech startups are fueled by financial crisis. And we can think that COVID-19 crisis is an extreme example of this crisis, and I expect that it will be a huge accelerator for digital transformation. And when we analyze the effects of the recent pandemic on payments area and consumer behavior on payments area, we can prioritize four findings. So first of all, there is a decrease in total amount of payments due to the economic slowdown in certain sectors. The total amount of payments in the whole economy is decreasing. And we face less frequented ATM transactions. This is the second finding. And another finding is that contactless payments are soaring. Really, it's increasing in huge amounts. And finally, we see growing online card payments in almost every part of life, so which is just promoting e-com. And when we come to the Turkish case, specifically on Turkish case, we can say that before pandemic crisis, Turkey was, and it is still, is the largest European payments market in terms of the number of payment cards. As of 2018, Turkey had more than 200 million cards, and today it's over 220. And in the same year, Turkey has also one of the largest POS and ATM networks in Europe. So it is in the third position with 2.4 million POS in POS network classification, and it is in the fifth position with 52,000 ATMs. And during the pre-pandemic period, the number of cards has been increasing steadily over the years in Turkey. But when we come to the pandemic period, I can say that March and April was the height of the pandemic in Turkey. So when we analyze these months, these last 2 months, with respect to the payment trends in Turkey, with the start of COVID-19 cases in Turkey, the payment transactions with cards first slowed in March and then shrunk in April. And
Emre, could you maybe just wrap it up a bit?
Yeah, sure. So I can say that the daily payment card transactions in Turkey was 24% less than compared to the last years. And when I just keep going, maybe I can say that we faced the diminishing use of cash in Turkey. And at that point, I can also easily say that, as I told during my previous answers, I have attended to CPMM main committee meetings, and it is the case almost in all over the world. So the usage of cash is decreasing. But one point here is important. So when the pandemic first started, people tried to get more cash because they were afraid, and they were they didn't know what will happen, and they take cash, but they didn't take this cash for payments reasons. They take this cash as a store of value. And we expect that as the pandemic is going through and as the things are getting more normal, at least, this will turn back and people put their money back into banks. And the last point that I would like to mention is the rise of the contactless payments. The contactless payments is increasing in Turkey very fast. We, as the regulators, we have increased the limits of the contactless payments, and it helped a lot. And I think it will keep going in the near future.
Okay, thank you, Emre. Thank you for this very detailed presentation. You obviously prepared yourself well. I really appreciate it because you were able to cover a lot of topics. Yesenko, how do you, as somebody who's working in payment cards processing, look on the influence of COVID and digital transformation in general on ATM and point of sale transactions?
from the perspective of processing center, this was really terrible for our business because of the ATM transactions and POS transactions dropped immensely, maybe more than 50–60%. As you know, there was this limited working hours for the stores, and people were afraid to gather in front of the ATMs, and the big merchant centers were closed. So this was terrible for the whole business. But what I would mention is that next thing that's gonna be big in this social distancing and buying perspective, that POSs do not have to be in the sense of, let's say, okay, they are contactless, so they require less interaction, but new emerging markets are actually now using QR payments, and POS device can be something like your Android phone. So we are seeing some switching from current POS devices to new involved matters of payment. So I think that would be a next step in this social distancing, a less crowded marketplaces situation that we're going to see in next period. As for ATMs, there's a lot of room for improvement. ATMs can be a good way of getting your cash without going to tellers, without going to banks. But we can improve, like for instance, I saw in Kiev and Dubai that ATMs are used for mobile top-up, for bill payments, for purchasing, for money transfers, and they are placed outside, not in the crowded areas. So they are actually something that you can find on a street where you can do all your transactions and all your business without going to a bank. So I think that would be our future. So QR payments and more digitalized, more evolved ATM.
Thank you. I mean, I'm surprised how quick you were with your answers. Thank you. I appreciate it. Since we are starting to kind of move towards more the end of this discussion, and in this e-commerce point of sale transactions, ATM and cash part, I'd just like to ask Violeta one additional question, which is so yes, there is an obvious push toward digital payments, and there is an obvious change in consumer behavior. Is there a certain demonization of cash? Yes,
We've seen that. I mean, even before this COVID crisis, there was a huge debate about, the cash is king versus the cashless society, something like PlayStation versus Xbox or Real versus Barcelona, you know what I mean? It was, you had big fans of one side and big fans of the other side, and many and good arguments for both sides, to be honest. And we didn't have a clear winner back then. I mean, different societies, cultures, habits defined a very local truth, I'd say. Now, as you said, yes, we had many reasons that people were pushed or preferred the digital payments, which makes sense. But there was also a very big discussion of whether cash is even more risky when it comes to transmitting the virus. And that debate got a lot of media attention because, as you know, very scary news sell a lot. So this was a very popular theme in articles and news on TV. And it even made the World Health Organization to come out and say that they did not really say that cash was transmitting coronavirus. And they also had an independent fact-checking organization to ensure that this is the truth. And they actually came out with announcements like, their World Health Organization advises the public to wash their hands after handling money, especially if they were planning to eat, for example, which, that would be the case even before coronavirus, obviously a lot more important and imperative after. So anyway, to cut the long story short, I don't think there's a big debate on whether card payments are becoming stronger. There obviously are, but what we see in our region is that we still have cash, and a lot of our economies are still cash focused, and even if the ratio changes, we still expect to have a lot of cash transactions. And right now, I mean, we're talking with a lot of, customers of ours about, as mentioned before, advanced features in ATMs for cash transactions, cash handling solutions like, TCRs that the bank tellers handle, or even smart safes that are on the retail points, and also new solutions for cash sanitization. So, I mean, I think overall we have to realize that cash will still be part of our everyday reality. And just to close my comment here is that we have a lot of players in this ecosystem, and a lot of them are traditional like banks, and a lot of them are, startup-like businesses like all the fintechs coming up. So I think it's very imperative for us to do this right and safely, for the traditional players to think like, and act like startuppers sometimes, but also for the fintechs to learn from the old and more traditional players, just to make sure that all the sides are captured and we do things right, taking into consideration everything.
Thanks a lot. I mean, very precise answers. Thank you, and a lot of information to digest. I'd just like, before moving to our last part of discussion, I'd just like to cover very, very briefly. We have several interesting questions, and again, I'll try to cover them at the end. I'm just going to touch upon one question because I can answer it quickly, which says, what are regulatory requirements for video electronic identification and onboarding? Do we have definite guidelines in Croatia? And the answer is yes, there are two sub-legal acts. One is related to eIDAS and relates how do you get eIDAS certificates, and the other is related to AML regulations, which applies to all the companies that have to oblige by those two. So you can find them. They are, of course, publicly available. So those are sub-legal acts, and they are not fully aligned, but yes, they describe two ways in which you can do video identification. Moving on to our last topic, and we have three panelists who will chip in on this. And we discussed prior to this panel, we discussed which topics might be interesting and relevant, and issues of interaction between digitalization of government services and financial services was brought forward as one of the more critical issues. And two questions of our audience definitely are spot on this subject. So in general, this need for digitalization of full supply chains was stressed out. And it seems that it's very important for this region, and there is certain slowness of governments to digitalize their services. Questions like, how do you sign a contract? How do you open an account, and so on. So against this background, I'd like to ask Robert about his opinions on strengths, weaknesses, opportunities, and threats of full digitalization of supply chains, and meaning governments, financial services providers, IT companies, and so on.
Okay, thank you. Well, I will answer it a little bit differently than you probably might expect. Of course, I'm going to talk about identity. Basically, the underlying issue of all of our troubles as a society is the lack of single digital identity. So let me just try to explain with a couple of examples that kind of I will try to wrap your head around a different concept than we all currently live in right now. So, for example, one example: when you go to the hotel, the receptionist gives you a smart card to unlock the room, right? What the receptionist has actually done is he has allowed your identity to enter a room, and the card is just a proof that you can do that, right? The other example: when you go home to your building and you open the garage door with the remote control, the remote control is just a proof that you can open that garage, right? When you get a ticket for a bus ride, the ticket is also just a proof that you have the ability to ride a bus from a station to station. Very similar. When a bank gives you a N token or a token or hardware token to log in to internet banking, what the bank has actually done is checked your identity and then allowed your identity to log into internet banking. And as a final example, when you use a digital certificate to sign a document, what you're actually doing is proving that you are you by using that certificate for which only you have credentials. Of course, the other part of the story is that it's non-repudiatable, but that's a different thing. So, you know, I could go for ages about the example, but the point is that digital identity, identity is everywhere around us, but we just don't see it as such. And the single most important key for a society to digitally transform itself is to implement a single platform that would allow people to have digital identity. This is what the Nordics have done, the Scandinavians have done, this is what the Baltics have done, this is what we have to do as well if we want to progress with digital transformation. Now, all of this being said, basically the answer to your question about digitalization of supply chains boils down to that we need a single platform for digital identity as a society, and then companies can, IT development companies can enter into specific company requirements and digitalize the internal processes that will use the digital identities of the customers that will digitally come into the company. And the same is for the government, the same is for the private companies, the same is for everybody.
Do those platforms, can they be private? Do they have to be government? Do they have to be both?
Yeah, it can be both. There are some, they are usually, I wanted to say they're usually private, but they are not. Actually, they are both, but the private ones are better because, as usual, the government is not so understanding about what the business needs, and they lag a couple of years about what the business needs are. So the public platforms like, for example, e-Građanin, right? e-Građanin or NIAS, which is actually behind it, which is like closest to electronic ID in Croatia right now.
Yes, so those are Croatian parts of identification infrastructure, government level.
This is just an example of something that started and has a life of its own now, but you cannot use it on mobile phones. There are like a million things that you cannot do with it, and you will not be able to do with it because it's not conceptually advised in such a way. But on the other side, you have private initiatives in the Nordics that offer a much wider scope of services for your digital identity. So the answer, my answer would be, it can be both, but the private ones are usually better.
Okay, thank you. Naida, what's your opinion on this? And then later on, we'll have two questions, again connected to this, but after we finish with this part.
Overall, as IT solutions are rapidly advancing, I believe that digitalization is inevitable. It's not really something that we can choose or not, but it's coming upon us, and we simply need to find a way what to do with it. In that context, not having a comprehensive legal framework for it is a luxury, essentially, because of all the risks that are coming with digitalization. So I believe at one point, all our countries, like I said, were not on the same level, but speaking, for example, for Bosnia and similar countries, will have to deal with it at some point, and we'll have to enable it and somehow control it, so to say. In order to be, to make that happen, you will need a comprehensive legal framework. You will need a regulator who is able to create a framework where you allow for the things to grow, for innovation, but at the same time to pull the plug where necessary. And you will need the business community to push for it where necessary. For the legal point of view, I think it's not different like we discussed. For the remote work, you need to balance the risks of data protection and abuse in that direction. You need to manage the fraud, security of transactions. You need, we discussed the identity, of course, AML, and ensuring the validity of the documents, enforcement, etc. It's not different than in any other aspect. It's simply there, and you have to deal with it from the legal point of view.
So we have to solve it, and that's just it.
Exactly, it's there. You cannot ignore it anymore. So you have to find a way what to do with it.
Okay, thank you. Now, Boyan, you are professionally mostly focused on risks. So how do you look upon this developments? Is it, more job for us, more business for us, or how do you look upon that?
But I have to be the bad guy again, scaring people or something like that. I really don't want to be that, yeah. So again, personally, same as I like work from home, I also like having everything digital, and I'm a big fan of the technology. I mean, that's kind of obvious, right? Now, that's all fine and good, but again, one of the problems that I see with this is that a lot of companies are rushing into bringing new features, connecting with everyone, making everything completely digital. And just to touch a little bit on what Robert talked about previously, I have to Robert, sorry. Like having a single identity, it's all great and good, and I'm all up for that. But just keep in mind that if my identity is digital, then once it gets stolen, and in theory it can get stolen, then everything falls apart. So that's one of the reasons why I can still see a lot of people being very reluctant on, for example, using Touch ID or Face ID authentication on their phones. Because if you steal my password, I can always change it, right? If you steal my fingerprint, if you steal my Face ID, I can change it, right? Not maybe as fun or easy as changing a password. So again, these features are all good and great. We definitely want to push toward that way. We just have to be careful about how we introduce new things. From my point of view, again, as you said, Slaven, like more work for us. It's also more opportunities for attackers, right? More people use digital channels for anything. Simply the attack surface is constantly increasing. And now we have the issue of those companies bringing their services
It seems that Boyan got a bit stuck. I don't know if it's not me, maybe it's the moderators.
He got hacked.
Yes, he got hacked. That's right.
He got stolen.
Who would be the best person? His identity got stolen. Yes. Okay, Boyan, you got hacked. Your identity got stolen. We can't hear you. You're muted.
Yeah, I got back muted. Okay, so probably some guys in my office playing fun with me or something. I'll go around the office and I'll tell them the story now. So let me just wrap this up because we are kind of running over time. What I wanted to say is that while this is at the same time brings more opportunities, obviously for me or anyone doing security work, it also increases the attack surface for the attackers, which now have not only the end victims, which are sometimes the easiest thing to attack, but also all the companies bringing and introducing new services online. The last thing I want to see is like people repeating same mistakes as in the last 20 years. And again, just to give you one example as the last thing to wrap up with that, about a couple of months ago, I was performing a penetration test of a smart home IoT setup, which included, smoke sensors, indoor and outdoor cameras, remote controls for opening doors, everything that maybe Robert mentioned as, having one identity, which is kind of cool. The vulnerabilities that we found were so trivial that, first of all, I thought that someone is playing a joke with me, right? I thought that this is something they did on purpose. And some of the things that we found were actually like 20 years old, something I thought that I will never see again. But in new technologies, I started seeing those vulnerabilities again. So the awareness is unfortunately relatively low, and this is something that we have to continuously work on increasing. And again, this conference is something that is really good because we covered so many different aspects technology is just one of them. Legal is also very important here, even though it's maybe boring, but it's important. Regulations and so on. So we'll make things more secure only if all of us actually, work together on getting that secure. So I'll end here, hoping that my guys will not hack my network or something. So sorry for dropping out exactly when I was speaking.
Great, thank you, Bojan. Excellent. We still have some 15 minutes left, and we do have several interesting questions. And there are two questions which are highly related, which is question number one is, can you suggest us the way to avoid legal problem we are facing in Bosnia and Herzegovina regarding the lack of e-signature regulation as a way to move faster into digital sale of financial services, especially in insurance business? And the second one, do you have any prediction about time, months, years of future activities on state level in directions of changing the regulatory and legal frame to facilitate the digital transformation of financial institutions in Bosnia and Herzegovina? Thanks a lot. Would anybody like to pick up on that question? And Naida, I'm not looking at you, I'm just asking randomly.
Sure, let me try. The first question about avoiding legal problems, honestly, as a lawyer, I'm very cautious to answer it directly, but it really depends on what kind of legal problems they're facing. Like I said before, we do have a legal framework. We do also have the preconditions for application of the qualified signature. So I know the situation is not ideal, but I would maybe in this situation try to push for it, at least to the extent possible. If that is not possible at all, for whatever reason the company is facing, then the alternative is do whatever you can electronically, do whatever you can without the actual, or minimize the need for contact with the client, and do it like that until the legal framework changes. It's really, there is no magic solution for it. You go either the currently more harder way and push something new, or you try to do everything as fast as possible and then minimize the need to put the paper-based business. As to the second question, very difficult to predict. The last information we have is that the new law is in the parliamentary procedure as of February this year, but under the circumstances, also with the pandemic, but this is an election year and other political issues that come with that. It's difficult to predict, but we do expect it. I would be optimistic and say in the next 12 months, at least.
Thank you, Naida, for picking up two questions and asking them on the spot. It's great it's a great, how would I say, to keep yourself on your feet. There is one question which is kind of interesting. I think there were two questions, but they were aiming at Ziraat Bank and the difference with, but I'd like to discuss a bit for Gökhan. He already answered online a bit, but there is this issue on how do you develop, how do you go into digitalizing yourself? Do you do it in-house, or do you use outside help? Do you go to fintech companies? So just very briefly, first Gökhan, and then maybe Sanin, because you are kind of on different sides of this problem.
Yeah, well, there is no one answer for that. It depends, actually. It depends on your talents, your capacity. I can't say that you should do it in your own, or you should outsource it. It can be a mix. You should make an assessment of yourself first of all. What are your strongest parts? What are your weaknesses? But fintechs, powered by data and analytics, large consumer ecosystems like Google, Amazon, or fintechs like that are opening new areas like customer acquisition, customer servicing, credit provisions, and collaborating with those kinds of entities would be great if you didn't have started your digital transformation journey yet. It would be a great start to learn from their experiences. And also, you don't have a monopoly on such data, the social media data. You can access those data by the help of those kinds of big technology firms or small fintechs. So I think if I started the digital transformation right now, I would get the help of fintechs for sure.
Great. Salin?
Thank you, Slaven. Yeah, I definitely agree with most of us just said, Mr. Özdemir. Fundamentally, there's no one answer for this question. You have to look internally at your capabilities, your strategic direction, the goals you're trying to achieve. I mean, I do ask a question, and that's actually one of the discussions that we're having online these days through LinkedIn, is why do companies that are not product technology companies do try to build their technology delivery expertise in the company? And I think it's a fair question to ask, because perhaps they should be building their muscle in different areas, in delivery of their services and strategic direction, and perhaps partner with the outside for. I mean, if there was one answer, there would be only one way to do it, but it's really not. It depends on the context. I think you have to start from the top, and most important thing is to get your strategy right and the direction. For that, if you guys don't have internal expertise to build it at that level, then that's really where you need to get serious external help, so to speak. I really do despise the term outsourcing in this context. In my mind, outsourcing implies a relinquishment, giving up the control over the process and delivery. And I think you can outsource commoditized services, things that are not necessarily that are not driving innovation, but you don't outsource your innovation, that's for sure. So with that sense, with that being said, you do look for outside partners that can bring expertise in the space of delivery of such solutions or products that maybe you don't have. Right, so definitely follow the process from the top down. Strategy has to be set first, and for that, external consultants is usually a good idea, because not many organizations have internal the firepower to build the strategy right. Once you set that, I think downstream from there, internally, you have to ask questions: why you're trying to build it in house versus with external partner, and what is the goal of that? What is the cost of that? Long-term retention of talent. Can you hire enough people? Can you keep them occupied and busy and interested? And all different things that come with that. We'll be more than happy to share more opinions and discuss offline if you want. You can find me on LinkedIn.
Thank you, Son. I mean, it's really most of the questions are like this. If you know a bit about something, then your answer is it's complicated. And yes, it's usually like that. Thank you. Moving on through questions, we have a question. As we are aware, most of the countries in the region are not EU members, and they should not comply with PSD2. But how your panelists perceive the open banking shift ongoing in the EU and other countries, a regulation leading to digital transformation? Actually, I might pick up on that because we are a regulator. We do PSD2. We do a lot of assessments. We did look at APIs of our banks. We do look at the strong customer authentication. Yes, banks are obliged to open their to open themselves to financial service providers, to AISP and PISP companies. However, it a lot depends on the size of the market. Croatia, for example, is a kind of a small market. So large third-party providers don't really have economic incentive to come to Croatia. And for Croatian service providers, it's kind of difficult also to develop a business model to be able to live on that because it's a question of scale. But I mean, sometimes it just takes time. So the APIs are there; they are open. We do see on Twitter, we do see that there are some PPPs who are more or less successful in accessing this data. We haven't seen a large scale usage in Croatia, but on the other hand, we have companies like Robert's company who are doing on the other side, trying to make a living out of that. So yes, I mean, regulation is driving digital transformation, but I mean, PSD2 is obviously just a start. There is going to be more of a regulatory-driven API development where companies are going to be forced to open themselves to other providers, to open their data, because it's one of the tenets of in the EU. It's not bank's data, it's customers' data, and bank is custodian of that data. So the customer should be able to allow somebody else to access this data. And this is this general driver. So we're probably going to see more of that in the future, and more APIs, more services, and more security risks. Yes. Yes, Robert, you'd like to add something?
I would just like to add, I can only sign what you just said, which is literally what we all believe in our company, is that it is customers' data and the banks are just the custodians of it. Thank you.
Okay, moving on, we have a general question. How much do you believe are companies aware of the importance of digital transformation at the moment? Would somebody like to say something about this?
I can pick it up if everybody's okay with this.
Yes, yes.
Just a short one. I mean, I think they're definitely aware, and they were before. But most of you probably have seen this funny, image that's a multiple choice question saying, who is driving the digital transformation in your company? And it's A, CEO, B, CTO, and C, COVID-19. And obviously C is the right answer, right? So I think the awareness was there before, but now I think the decisions came faster. So everybody knew they had to transform, but they were more hesitant to make investments, to risk, customer experience, to shift their employees, knowledge, and make them learn more things, use new technologies. So I think that this change just made the decisions happen. That's my opinion. Awareness was there before.
I'm very opinionated about this. I really think when we say, that whether they're aware of digital transformation or not, I think the focus should be on the second part of the term, transformation. I mean, everybody keeps talking about it, but again, it's not just about creating yet another revenue channel or, putting stuff online, or, I mean, it's truly transformation of your internal business model, the way you make money as an organization. I think many companies are not doing that because they're addicted to what they're doing right now. They don't want to reduce, we have very expensive payment fees in Bosnia, extremely expensive for such a poor country. And, there's really no interest by any player in that market where they're siphoning such huge amounts of fees to get efficient and reduce the cost, let's be honest. So fundamentally, they're not digital transforming. They're just putting lipstick on a pig. And, the fact they would, with the data opening, hopefully something like PSD2, then they would be forced to share the data and integrate, and then they would have to compete with new entrants to the market, which are much cheaper, faster, and better. So, that's really when we said whether they're aware of digital transformation. I mean, everybody knows the term, and everybody's trying to do mobile apps and all that, whatever, but they're not really transforming the way they work internally because they're still bricks and not clicks. And once only very small percentage of companies really accept that as the transformation part. Even with the COVID-19, I think many of the companies that are doing full remote and all that, they're just waiting to go back. And, they don't realize that the back is not where it was before. So they'll be in for a surprise, but still that not going to trigger them fully transforming their business model. So I really think that the question is not that easily answered. Everybody talks about it, but I don't think many people are doing it, if you ask me.
Okay, excellent. Thank you all. We covered all the questions. Would anybody like to add something at the end of this panel? From my side, I mean, I learned a lot. It was very interesting. And I think we really filled up those 3 hours because it was dynamic, a lot of new information, a lot of interesting things. So from my side, I'd like to thank you all for taking part in this, and to everybody in the audience for giving up their time to listen to us discuss some esoteric topics. If not, I don't know if Edina and our organizers, if they have something to add. I'm not seeing any new questions. So if we are here, yes. Just a second. I received an email. It might be additional questions. No, it's not. Anyway, I'd like to thank you all for taking a lot of your time, as I said, and I hope to see you maybe not only digitally in the future in some professional or other settings. Thank you.
Thank you, Slaven. Thank you, everybody.
Slaven, thanks, everyone.
Thank you.
Bye.
Take care. Bye-bye.
Thank you. Bye.